Okay, welcome to the deep dive. Today we're going to unpack the story of Axis Bank Ltd. It's quite a journey, really.
It is, from facing some pretty serious challenges to becoming, a major force in Indian banking.
Exactly. And we've sifted through a whole stack of sources, financial reports, historical stuff, to pull out what really matters for you.
Yeah. Our mission, if you like, is to get under the skin of the bank's evolution, where it stands now, and what the stock performance is telling us.
Right. And the sources seem to land on fairly valued right now, but, well, there's more to it, isn't there? It gets interesting.
It really does. I mean, you look back, and it's fascinating how much has changed. Axis Bank actually started life way back in 1993.
As UTI Bank, wasn't it?
That's right, UTI Bank. Promoted by public sector institutions, UTI, LIC, those kinds of names. A solid start, but maybe lacked a distinct private identity initially.
So it had this sort of government-linked perception. Was there a key moment when they shifted away from that? I remember reading about a rebrand around 2007.
Spot on. That 2007 rebranding to Axis Bank, that was the big strategic play.
To shake off that government-owned feel.
Precisely. And our sources show it worked incredibly well. Customer accounts jumped something like 67% in just that next financial year, FY08.
Wow, 67%. That's a huge impact.
It signaled they were serious about being a different kind of bank. More agile, more private sector driven.
Okay, so a major brand transformation, but it wasn't all smooth sailing after that, was it? Even with the new name, new customers, what was going on beneath the surface?
No, you're absolutely right. Just as they seemed to be hitting their stride, things got quite tough in the mid-2010s.
Tough how?
Asset quality, big challenges there. And regulatory scrutiny really ramped up. Remember the RBI flagging that bad loan divergence?
Yeah, that was major, where they'd underreported their NPAs, right? Non-performing assets.
By a lot. The figure was 9,480 crore in FY 2016, a massive underreporting.
9,500 crore. That sounds critical. How bad did the actual NPA situation get? I see a figure here. Gross NPA peaked at 5.28%, December 2017.
Yeah, 5.28%. That meant over 5 rupees out of every 100 they'd lent out was looking like it wouldn't come back.
That's serious trouble for a bank, a credibility issue for sure.
Definitely a credibility crisis. But, and this is the crucial part of the story, look at the turnaround. That gross NPA figure, down to just 1.28% by March 2025.
A huge drop.
And net NPA, that's after provisions, only 0.33%. It really shows they managed a successful cleanup. Improved risk management, cleaned the books.
Okay, so that balance sheet repair was probably the foundation for what came next, right?
Yeah.
So with that stability, what strategic moves did Axis make? How did they build on that?
Well, that clean slate really opened the door. They've diversified their model quite effectively, strong in both corporate and retail.
And acquisitions. I recall the Citibank deal.
Yes, exactly. The 2023-2024 acquisition of Citi's Indian consumer business, that was key. It gave a massive boost to their Burgundy wealth management arm.
Making you one of the biggest in India now.
One of the largest, yeah. Managing something like 5.92 trillion in assets under management for clients. That's serious scale.
And they're pushing hard on digital too, aren't they?
Oh, absolutely. Digital leadership is a core pillar. They've got about, 32% market share in UPI Payer PSP.
That's huge in the UPI space.
Yeah.
And their app.
The Open by Axis Bank app, around 15 million monthly active users. That reach is vital.
And financially, it looks solid now. Strong capital, stable funding.
Very much so. Profitability is robust. Capital adequacy, the PRR, is healthy at 17.07%. That's a good safety buffer. And their funding base is stable. Low-cost CASA deposits consistently around 40-41%. Cheap funds are gold for a bank.
Okay, so the fundamentals look strong, the bank's healthier, but the stock, that's where it gets a bit confusing, maybe.
Yeah, it presents a bit of a paradox. Look at the 5-year return, a strong 148.78%. That clearly reflects the turnaround we've been talking about.
But then you zoom out.
Exactly. Zoom out to 10 years, and the return is only 93.16%.
Which lags way behind the main indices like Nifty 50 or Sensex. They're up around 195% in that time.
A massive difference. So the big question is, why the lag? Why hasn't the long-term performance caught up with the recovery?
What do the sources suggest? Is it just market sentiment?
That seems to be a big part of it, a kind of sentiment overhang, as some sources put it. Lingering memories of those past issues, the bad loan divergence, maybe even demonetization fallout.
So the market remembers, even after the cleanup.
It seems so. Market memory can be long, and sometimes it demands a discount for past troubles, even if the business itself has fundamentally changed. Plus, Recent short-term performance hasn't helped.
Right, a weak month recently, down about 12%.
Yeah, partly linked to a dip in Q1 net profit, which saw the stock slide about 6%. And it is a more volatile stock than the market generally. Beta of 1.34 moves around more.
Okay, so bringing it all together, using someone like Benjamin Graham's value principles, where does that leave us?
Our analysis suggests it's pretty much fairly valued right now.
Based on what? PE looks decent?
The price to earnings ratio, yeah, it's attractive at around 12.97. The price to book is about 1.89. Now, that's a bit higher than a strict Graham benchmark, perhaps.
But justifiable, given the improved health.
Arguably, yes. Justified by the turnaround, the better balance sheet, and the future growth path.
So wrapping this up then, what's the key takeaway for you listening to this? Axis Bank's journey. It's quite the case study.
Definitely. A remarkable transformation, strong fundamentals now, good strategic moves in a growing Indian market.
But the stock performance is still wrestling with history, isn't it?
Yeah.
That mixed signal tells a story about market perception versus reality.
It really does. Which brings us to a final thought for you to chew on. How much does a company's past, its reputation, truly hang over its valuation today, even when the numbers, the fundamentals, are pointing towards success?
It's a reminder, maybe, that investing isn't purely a numbers game. Sometimes it's about overcoming those ghosts of the past.